Hi students, how are you? Today we are going to do a question in what you call the profit and loss account in the company's company's profit and loss account. Okay, so I am going to in last session we have seen the format of the profit and loss account. Okay, so in this session we are going to do a small question to see how we can do the postings in the new profit and loss company's profit and loss account format. Okay, so shall we move into the question, please? In the question, okay, wait. In the question, ABC Private Limited, right? Okay, uh, ABC Private Limited has the following balances at the end of the financial year of 31st 3rd 2022. That is end of the uh, year, right? Sales 1,080,000, 10,000,000 and 80,000. Sorry, 1,000,000 and 80,000 sales, right? Stocks, beginning stocks at the beginning, work in progress and finished goods, raw materials, etc. Were given, and purchase of raw material for 480,000. Salaries and wages 140,000, electricity 15,000, depreciation 40,000, interest on debentures 18,000, interest received 7,800, interest paid on other borrowings 8,500, dividend received 9,400, commission on sales 9,000, audit fees 10,000, profit on sale of investments 5,000, provision for doubtful debts 5,300, managing directors remuneration 26,000, profit and loss sales, profit on sales of fixed assets 36,000, 16,000, right? Income tax current period 75,000, deferred tax 12,000, stocks on 31st 3rd 2022, work in progress 40,000, finished goods 50,000, raw materials 60,000. Okay, so they ask us to, there is no any other adjustment, no adjustments were given here. So our work is just to do the postings, right, in the relevant places. Right here we have to prepare in the given set format for the company's accounts. Okay, so the notes we had to prepare accordingly. So first one, they say sales 1,080,000, right? Sales, there is no need for the what you call notes, right? 1,000,000 straight away we can put 1,080,000, right? Other income, under the other income we have to see whether there is any other income. We let it be there, right? Stocks on work in progress, finished goods are there. So we have to see cost of material consumed, right? In the first cost of material consumed, finished goods, not the finished goods, raw materials, 135,000, 135,000. Purchase of raw material, how much? Purchase raw material 480,000, 480,000. So altogether 15,000, 615,000 will come, right? So we have done that, and again we had to go for the next item is changes in the inventories. In the changes in the inventories, opening stocks of the work in progress 36,000, 36,000, right? Finished goods, how much? Opening stocks 97,000. 97,000. If we fill like this, it will be easy for us, right? 97,000. So purchase of raw materials, so we have finished. Salaries and wages, they have given 140,000. Salaries and wages, right? Employees cost, they have not given other than the salaries and wages. So we can directly put it to the employees benefit. Salaries and wages, how much? Salaries and wages 140,000. 140,000, right? Salaries and wages. So next one is electricity charges. Electricity charges, where we can put other expenses, right? Before going for that, like that, we will see what are the other income. What are the other income, right? Other income, purchase, interest on debentures. Interest on debentures 18,000, right? Interest on 18,000, interest on debentures, okay? 18,000. Interest received 7,800. Investments, right? Dividend, interest on debentures is the payment, I think, right? Okay, we just keep it that. Interest received 7,800. Interest received 7,800, right? Dividend received 9,400. 9,400 is a dividend received. And thereafter, profit on interest received 7,800. Interest paid on other borrowings we will receive. Interest dividends received is 9,400. Audit fees, profit on sale of investment is 5,000. Profit on sale of investment, it is 5,000. Then here we will get 200 and 110, 15, 22,200 is the note 1, that is other income. Other income we will put 22,200. So total is 202,200. 202,200. This is the total income, right? So other one is we have to cost of material consumed. We have to go for the closing stocks. Closing stocks, cost of material, raw material is 60,000, right? 60,000 we have to deduct here, right? At the same time, we can fill these amounts. Work in progress is 40,000, right? 40,000 closing, and finished good is 50,000, right? 50,000. Keep this as it is, right? And we can balance the cost of material consumed, that is 600, and out of 615,000 you have to deduct 60,000. Then 555,000 is the amount. 555,000, right? So here you will get other income. You have given note number 1, right? Other income we have given note number 1, right? Right? Other income 22,200, that is the other income. As a 202,200, right? Then cost of material consumed is the number 2, note number 2. How much? 555,000. 555,000. Next one is number 3, right? Number 3, changes in inventories. So you have to add these two, right? These two 3,000 and 133,000 is the opening stock. Closing stock is 90,000. So what is the changes is 43,000 is the changes in the inventories, right? Changes in the inventories is 43,000. So we are going to insert this one as the 43,000 changes in the inventories, right? Next one is we had to find out what is the finance cost. When we are going through the uh, debenture interest, right? Where is debenture interest? Interest on debenture 18,000 is the finance cost. Interest on other borrowings, we see interest on other borrowings is 8,500, right? Then here 26,500. 26,500 is the other borrowings. 26,500. This is note number 4. Note number 4 is finance cost, right? So next one is depreciation and amortization expenses. Depreciation only we have received information on depreciation 40,000 is the common. So we are not going to give any note for that. Note is not required, only one item, right? So we have to leave it, right? Okay. On the other expenses, now we have to go for the other expenses. What are the other expenses? We have stocks we have taken, work in progress, finished goods, raw materials, purchase of raw materials, salaries and wages, electricity 15,000. Electricity 15,000. And next one is depreciation we have taken, interest on debentures we have taken, interest receipt we have taken, interest paid on borrowings we have taken, commission on sales 9,000. Commission on sales 9,000, right? Profit on sale of investment, right? Profit on sale of investment we have taken. Provision for doubtful debts 5,300. Provision for doubtful debts 5,300. Managing director's remuneration is 26,000. Managing director's remuneration is 26,000. MD's remuneration is 26,000. Okay. Profit on sale of fixed assets. Wait, will you? We will complete this one. And income tax, deferred tax. Okay. Audit fees 10,000. Audit fees 10,000. Right? Audit fees 10,000. This all expenses we have taken the other expenses. Right? Other expenses we have taken down. Right? So we have to add the other expenses. Okay, so here you will get 300. Okay, 31, 40, 50, 65,300. Right, other expenses are 65,000. 65,300 is the other expenses, right? Other expenses, right? Then total expenses, you have to add these all, right? So if you want to add this all, okay, this is first 555,000. 555,000 plus 43,000, 140,000 plus 26,500 plus 40,000 plus 65,300. Then 869,800. 69,800 is the total expenses, right? From this is of course 1,102,000, 1,102,000, right? This is 1,080,000 is the revenue from operations. Then the other income is 22,200. Then you will arrive at 1,102,000, right? From 1,102,000, if you deduct the 869,000, then you will arrive at the profit before income, right? Profit before tax, right? Profit before income or loss from exceptional items, right? Then this is 0 0, and out of 12 8 goes 400, and we will get 11 2, right? Then of course 9, from 9 if 6 goes 3, and out of 10 if we got 232,400 is the operating profit. This is the profit before, right? 232,400 is the, right? 232,400, right, is the profit before income or loss from exceptional item, right? We will do the sum. 1,102,200 minus 869.8, then 232,400 is the profit. Then we have to see profits from exceptional item. What is you call profits from exceptional item? That is, we have seen profit on sales of fixed assets, right? Profits derived from sale of fixed assets, that is 16,000, 60,000. That is the one we have to mention here. 16,000 profits from exceptional item, you have to add it. Then 248,400 is the profit before tax. We arrived at the profit before tax. Now we have to calculate the taxation. How? We have to see what they have mentioned about tax. Okay. Sales given, stock given, purchase of raw material given, salaries and wages given, depreciation, interest, debentures, interest received, and interest paid on other borrowings, dividends received, and commission on sales, audit fees, profit on sale of investment, provision for doubtful debts, and managing director. Income tax is, current one is 75,000, right? So current one is 75,000, right? Plus deferred tax is 12,000. So you have to add the current profit, current taxation plus deferred tax. Then how much it is? 87,000. Taxation is 87,000, right? So out of 240, right? 248,400 minus 87,000. Then we will get 161,400. That is the profits after taxation. Profits after the taxation. Okay. This is how you have to prepare the company accounts, company profit and loss accounts. Okay. So again, we will come for the recap. Revenue from operations 1,080,000. Other income we have given in the note 1, that is interest received 7,800, dividend received 9,400, and profit on sale of investments 5,000, right? Then it comes around 22,200, right? We are adding that with the revenue from operations, then total revenue comes around 1,102,200, right? Out of 1,102,000 we are going to deduct the expenses we are going to deduct. Here there is a change in the format, right? So expenses, we are going to deduct the cost of material consumed. Cost of materials means your cost of sales, just like a cost of sales. Opening materials minus, okay, opening stocks minus plus purchases minus closing stocks. If there is any carrying inwards, that also has to be added with the purchases, right? Okay. Purchases returns, if there is any returns, you have to deduct it from the purchases. Okay. Then after deducting closing stocks, we will get the cost of material consumed, that is around 555,000. Okay. So changes in inventories, this is the calculation you have to count. See, changes in the inventory, we have taken the raw materials to the cost of material consumed. So there are three items in opening and closing stocks, that is raw materials, work in progress, and finished goods. Raw material already we have taken to the cost of material consumed, then remaining are work in progress and finished goods. Work in progress and finished goods which have not been taken into the accounts yet. Okay, so we have to take that. Then work in progress opening 36,000, finished goods opening 97,000, we get the total is opening stocks are 133,000. Okay, again come back to the closing stocks. Work in progress of closing stocks 40,000, working finished goods closing stocks is 50,000. If you total this 90,000, then deduct the opening stock closing stocks from the opening stocks. Then the 43,000, 133,000 minus 90 is 43,000. That is the changes in inventories, that is 43,000. That is note number 3 I have given. Then note number 4, we have then finance cost. Finance cost, that is interest on debentures. We have paid interest for the on debentures 18,000, right? Interest on other borrowings 8,500, maybe other borrowing in the sense bank loan, etc., etc., personal loans, etc., etc. On that interest 8,500. Then the total interest payable or paid 26,500. Then here we used to pay, say, finance cost, note number 4, 26,500. Okay, depreciation, since we had only one item, we have not provided any notes to the depreciation or amortization. So that is as it is 40,000 we have put. Other expenses we have given a note number 5. In note number 5. See, in the other expenses, electricity, other than what the expenses mentioned here, all the expenses should be posted to the other expenses. That is electricity expenses 15,000 and commission on sales for 9,000, audit fees 10,000, provision for doubtful debts 5,300, and managing directors remuneration is 26,000. Then total expenses is 65,300. Total expenses, other expenses are 65,300. Then calculate the total expenses. Then total expenses comes to 869,800. So if we deduct this 869,800 from the total revenue of 1,102,200, then we will arrive at 232,400, which is called as profit before income or loss from exceptional items on sale of exceptional items, or right, from sale of exceptional items. So then we add the profits from exceptional items, that is, we have seen fixed sale of a fixed asset, that is not the routine activities of the company. Since that we call this one this sales, and we have to disclose it separately as a profits from exceptional item, that is 16,000. We are adding that 16,000 with the earlier profit 232,400, then we arrive at the 248,400. This is called as profit after tax. This is called profit before tax. Okay, sorry, profit before tax. Then deduct the taxation. So during the period, tax is 75,000 and deferred tax is 12,000. If you add these both, then you will arrive at 87,000 as a taxation for the year. So if you deduct 87,000 from 248,400, you will arrive profits after taxation. This is the profit after tax. Okay, so I feel you would have got the picture. So do more questions and see. If you don't understand, go again and see the video and practice the question. Okay, so I'm going to conclude this session and I hope to meet you in next session. Thank you.